Hey folks, it is time to get our monthly updates caught up to speed with our ATM program, our asymmetric trade management approach. These are our results for the month of July and of August. Okay, so as most of you know, we have two main programs. We have a trading program. We call it the live trading room. We do a couple 0 DTEs every day in there. We do a bunch of other trades in there, some of them very proprietary in nature, meaning we're the only ones that I know of that do it. But we also have a more passive approach, more investing rather than trading. It's for people that are either a more risk management focused or just simply don't have the time or maybe even the desire to want to trade every day, day after day. They want something that's more passive in nature, and that is our ATM program, the asymmetric trade management. Just takes 5 minutes a day. It's passive and it is investment focused. So we need to update our results for the past 2 months, the month of July and the month of August. That'll bring us up to date here with the full results for the program. Just a quick review of the program. Again, dual fold mandate inside of the program. Pretty straightforward. Number one, we want to beat the S&P 500. So obviously it's pretty easy to go out there and buy an index fund. That's sort of the metric that we measure our success against. Anybody can go out and put their retirement account into an S&P 500 index fund. So if we can't beat an unmanaged index, it probably doesn't make a lot of sense for us to even be investing. We should just be passively putting our money in the unmanaged index, right? Number two, do it at less risk. Now we measure risk via standard deviation. That's how much volatility we bring into the trade. Those two things combined, if you can do that, which is very hard to do, but if you can accomplish that, you create what's called alpha, meaning you're getting a better return for a lower risk. And that's what we're all seeking. So that really was the genesis of the ATM program. We're traders at heart. I love our live trading room. We're in there every single day doing 0 DTE trades and other types of different day trades and weekly trades. But there is a place for long-term passive wealth creation. And I think that the ATM program has stood the test of time at this point. We're almost 3 years into the program officially. It's a strategy and an investing approach that I have used for decades, but it's only been officially part of our program here for the last 3 years. And the results, again, I think speak for themselves. So just a couple of review points of the system. It is investing. It's not trading. It's a very passive approach. I had a member that canceled their subscription to the ATM program a couple of weeks ago. And in the comment section, they said, I've been in this program for 3 weeks and I haven't made any money. And it just made me chuckle when I saw that, because, you know, who would set up a long-term investment program, a 401k program, and 3 weeks into the program go, well, this is ridiculous, I'm not wealthy yet. That's not how investing works. If you want to look for daily profits that you can put in your pocket, we have a program for that. It's called trading. This is not trading. This is investing. It's passive, okay? It's a long-term approach. It works in both IRAs and non-IRA investment accounts. There are a few tweaks that you need to use inside of an IRA to make the program work, but it still works for retirement accounts. It takes no more than 5 minutes a day to put the trades on. Every single day in the morning, we have between about 1 and 10 adjustments that we put in place for our allocations in our portfolio. We make those adjustments and then we close the laptop, we walk away. We're done for the day. There's no trading, there's no watching our accounts, there's no monitoring going on. It literally is 5 minutes in and you're done for the day. The dual fold mandate that we talked about, beating the market, doing it less risk, of course. Our results are tracked and based on net lick changes. So we track a lot of the metrics in our live trading room. What are our number of wins versus our number of losses? What is the ROI on a particular trade? And then what would that ROI APR at over an annualized period of time? What is our max win? What is our max drawdown? You know, all of the metrics that we tend to look at in trading. We don't look at any of those things in the ATM program. The only statistic that we look at is our net lick value. Is our account value going up or down? That's the only measure of our success that we look at, is what is happening with our account value, our net lick. Okay. There is a hedge fund aspect here to this trading approach. One of the ways that we can get less risk inside of the account and still have a good shot at beating the overall market is we do take short positions along with long positions. So it does balance the account out. And you'll find that when we really leapfrog the market, when we really do better than the market, are those flat to down months in the marketplace. If the market goes up by 2% in a month, 3% in a month, that's 24 to 36% of your annualized rate of return that the market is bringing in an unmanaged account environment. It's going to be really hard for us to keep up with that, especially when we're trying to minimize the risk that we are taking. But when the market is down 2% and we're up 2% for the month, well, that's a 4% swing. And you don't need more than maybe 2 or 3 of those months during a year to really explode the advantage that our approach has versus an unmanaged index. Unfortunately for us this year, we have not had very many down months. So we haven't really had the ability to extrapolate out the advantages that we carry inside of our portfolio with these short positions. But we do hold short positions as well as long positions. We focus a lot on non-equity correlation, uncorrelated strategies with uncorrelated markets. We trade all kinds of different things that are in the market but not necessarily of the market. Things that maybe go up and down independent of what stocks are doing. That helps us with our risk management as well. There are 4 main strategy components to how we trade this system. Number 1 is short and long positions, and we enter those short and long positions with a credit strangle. Number 3 are the credit strangles themselves. They get us into those short and long positions, and while we are waiting for a short or a long position to be assigned and materialize, of course, we're bringing in income from the credit strangles. And then number 4 is what we call an anchor position. The simple term for this is a poor man's covered call. A technical phrase is a leap covered right. It could be a leap covered put or a leap covered call. So it could be bearish or bullish. We happen to be in a bullish one right now, and we usually use the SPY as the anchor for that. So that's a quick overview of the program. Again, a lot of non-equity correlated items that we trade: crypto, nat gas, oil, silver, real estate, bonds, copper, coal, uranium, lithium, coffee, multiple foreign indices as well as the US indices. So we do have a pretty good broad-based diversification there. When you add in our short positions along with the non-equity correlation, that's where we attempt to get better than average rates of return at lower risk. That's the lower risk component. Okay. So if we look at our performance updates, again, 2021 was the first full year of this program. It was an amazing year. The market had a good year, is up 27%, but we were up 54%. So we absolutely trounced the marketplace in 2021. 2022 technically was even a better year. Last year was even a better year because the market lost almost 20% over that year's period of time, and we made almost 23%. So it was an absolutely fabulous year for us last year. 77% returns cumulatively in this program over the last 2 years. I think that we have a really good shot this year at getting over a 100% return in 3 years, which would just be fabulous. So let's talk about the last couple of months. Let's talk about July first, and then we'll look at August. So for July, you can see a couple of numbers here. You can see that the ATM, whoops, here we go, there's July. You can see that for July, we were up about 8.5% versus 18%, almost 18.5% for the marketplace. You can see here that there was a big divergence. We retraced to the downside. The market retraced to the upside. The real thing, there's two things here. Number one thing that hurt us here was banks. So the regional banks got hit pretty hard. We were in some of the regional banks. We got whipsawed there. And then number two was the AI stocks. AI stocks to surge up, and we had some AI stocks. So we sort of got beat up a little bit there in the month of July. You can see that our standard deviation was 1.68% versus the market's 0.86%. We would obviously love to beat the market month in and month out. We know that that's probably not going to happen, but this is really concerning to us because while we can't control what our rate of return is, we do have a decent amount of control over the amount of standard deviation or volatility that we accept. This has been a rare occurrence for us to have two sectors of our model portfolio both sort of simultaneously beat us up a little bit. But nevertheless, that's where we ended up through the month of July. The month of August, we bounced back quite smartly, and it was a pretty darn impressive return for the month. For the year to date and through the month of August now, we're up about 13%, just a little bit more than 13%. And that compares, I would say, fairly favorably with the overall market, the S&P 500, which is up about 16%. So you can see here that we are still lagging just a little bit where the market is. However, and I've said this a couple of times in our Discord chat room, I feel like, number one, we still have a really good shot at beating the market this year. And to be clear, we've talked about this over and over again. The two mandates of this program is beat the S&P 500 and do it at less risk. So if the market loses 15% in a year and we only lose 5% in the year, we call that a victory. We call that a win because all we're trying to do is beat this unmanaged index, this S&P 500. So that's not to lower the hurdle at all for us as a bar. But I do think that in terms of where the market is sitting, in terms of where inflation is sitting, the Fed and recessionary fears and all those kinds of things, I think that we've got a much better shot this second half of the year than we did the first half of the year when the market was just chugging higher and higher and higher. So I do believe we've got a really good shot there at beating the market. The other thing that it gives me optimism for, I think, maybe potentially finishing out the year around a 30% return is where we are at on our extrinsic value. So let me jump over there and show that to you real quickly. So here's our account positioning right now. Again, I'm doing this video on Monday, September the 4th in the evening. And I don't necessarily need or want to go through all of our open positions here, but a couple of things that we look at is obviously our net lick. We base everything off of our net lick. I started this year with about 63,000 approximate account value. I'd love to see me finish out the year this year around 80,000 of value and then set myself up for 2024 and get this account to six figures, this account over $100,000. That would be awesome in a 4-year period of time to go from, say, a $25,000 account to a $100,000 account, all passive, not needing to day trade or any of that kind of stuff. I would be thrilled with that result. But a couple of things that we look at here in my account, again, I'm a roughly $70,000 account right now, is the daily theta. And we like to try to keep this around $300. So there is some positioning here inside of this account that I need to clear out some of the quote-unquote dead wood, bring in some new positions to bolster our daily theta. But the other thing right here that is important is our extrinsic. I've got over $10,000 of extrinsic sitting out there. And so the question is, when is that extrinsic coming in? And what is the likelihood of actually realizing that? And all of this extrinsic is out to no later than the end of this year, December 31st. And it also, I think, has a high probability of coming in. So that would obviously put me above 80,000 for the year. That obviously does not count any future income that we are generating over the month of September, October, November, December. So I feel like we have a really decent shot here at A, beating the market, and B, coming in somewhere around a 30% return for the year. That would obviously be wonderful. So while we're lagging the market a little bit right now, I think that we're on track. We've had a month and a half of basically getting stalled out with the bank stocks and the AI stocks, but I think that we're back on track right now and moving in the right direction. So that gives you a quick overview where we're at. If you do want to be a part of our live trading room, that's trading, not investing, you can go to tradelivewithus.com. There's plenty of information on the YouTube channel here about our different unique trades that we do, the success and failure rates that we have with those. I think you'll find that it is the best online trading room out there. But if you are more akin to passive investing, you don't want to be glued to your computer screen, you don't want to have to stare at your trades all day long, then investing is probably more along your lines, asset allocation, and that's what we do in the ATM program. You can go to tryatmforfree.com. You can come check out our asset allocation model. You can have a Zoom meeting with myself, go over how we structure these trades and build them out for you. And again, we're looking for better returns at less volatility than the overall market. That's our ATM program, guys. That's our asymmetric trade management. And again, I really do believe that what we have put together here, what we have actually realized, it's interesting. People on the internet will poo-poo and downgrade almost anything that they can, and yet our results speak for themselves. Our documented results, I think, really can truly be life-changing. We've used this example before, but we are averaging around 30% a year over the last 3 years. If we can come in around 30% a year again this year, and again, there's no guarantees of that, but $70,000 over the next 10 years at 30% a year, that's very close to $1 million. And it would be amazing to have started this program just a short 3 years ago with $25,000 and in 13 years turn that into $1 million. I think that would in fact be life-changing. So again, if you want to try an investing approach that doesn't take more than 5 minutes of your time, is very risk-focused, you can go to tryatmforfree.com and we'll get you set up and you can check out our asset allocation model. Appreciate you guys. If you do want to connect with me, you can do that at scottstewartcontacts.com. All of my contacts there, Twitter, Facebook, YouTube, live trading room, you name it. It's all right there. So appreciate you guys. Hope you have a good trading month. Obviously, we've got a big month ahead of us here with a lot of extrinsic value in the ATM program. And we'll be working over these next 3 or 4 weeks to try to extract as much of that as possible. So hope you guys have a good trading month, and we'll talk to you soon.